Okay. So now we're recording. Okay. And again, this is what we're going to do in chapter 2. We talked about this last week, but I wasn't really comfortable at the end of last week. There's just too much information in this chapter. And if we were in a classroom, I would probably approach it a little bit differently. I would try to do it in pieces rather than try to do the whole thing at one time. But unfortunately, this is what we have to work with. Um, so what are we doing here, right? We're learning how to record transactions into the accounting records in a journal first, and then to take the information from the entry in the journal and put that in the accounts, which is contained in a book called the General Ledger. Why are we doing all of this? Remember, go back to chapter 1. Chapter 1, we learned how to prepare financial statements. But in chapter 1, they gave you the numbers. They said, here's a list of numbers, take them, put them on the different financial statements, right? The list they gave you was in random order, and you had to put them in the right place, almost like putting a puzzle together. But those numbers were given to you in chapter 1, right? Now we're going to learn where those numbers come from. You know, when a business starts, everything is zero. And then day by day, as things happen, the numbers change. So it's important to understand that these numbers or these transactions affect that accounting equation. And remember what that accounting equation looked like, right? They give you this chart, and this is very important, right? This is the kind of thing, I think you're allowed to print pages out of this thing. I don't know if I print the whole book, but you're allowed to print out specific pages, and this would not be a bad thing to print out. And every once in a while, just stare at it, because this is probably the most important thing. Everything that we've done and everything that we will do is somehow tied into this diagram. We said that assets equal liabilities plus stockholders' equity. And when we first look at that, that looks like a balance sheet, right? We listed on the balance sheet, we listed the assets, and we came up with a total. And then we listed the liabilities, and we listed the stockholders' equity. And when we total that all together, the left side of the equation equals the right-hand side of the equation. Stockholders' equity is a little bit slippery, though, because stockholders' equity isn't like a stationary target, right? It has all these pieces that make up stockholders' equity. The two big parts are common stock and retained earnings. And, up until there, everything we're talking about is balance sheet. But retained earnings, again, it isn't just like one number. Retained earnings is made up of net income minus dividends, and net income is equal to revenues minus expenses. So revenues minus expenses equal net income. Net income is something that's available for the stockholders to get as a dividend, right? So that's the relationship between assets, liabilities, stockholders' equity, common stock, retained earnings, revenues, expenses, dividends. And then we learned how a transaction affects the equation. And we went through a bunch of these transactions. I think there were 10 or 12 of them, something like that, right? And we see that if the left-hand side of the equation increases, then chances are something on the right-hand side of the equation increased. In this case, it was a revenue, right? We provided soccer training to customers for cash. The cash increased. And it's not that retained earnings increases per se, but when we're in the business of providing soccer training, that is revenue. And revenue is something that increases net income, which is something that increases retained earnings, right? So, those are the relationships. And that's something you should really go over and over and over again until you're really comfortable with it. Let's see, there was something else I wanted to show you. And here's a summary of all those transactions, right, in a spreadsheet form. Now, the spreadsheet is fine, except accountants don't like to use it because it's very confusing. In other words, look at that column for cash, for example. You know, when this business first started, it was 0. Well, that's fine. That's understandable. But then all these different things happened to the cash. Some increased cash, some decreased, right? You can see the pluses, you can see the minuses. And we wind up, for example, with cash, we wound up with $6,900. And we know that cash is an asset and will go on the balance sheet. In fact, all of these things here are assets. You see across the bottom, they add up to a total of $41,200. So you could prepare a balance sheet from this. I mean, that's, you know, you could do that. But again, the reason why we don't like to use the columns is because it's confusing between the pluses and the minuses, and it becomes easy to make a mistake. So what we do is we substitute, instead of a column for cash, a column for accounts receivable, a column for supplies, and so on. What we want to do is to come up with what's called an account for cash, an account for accounts receivable, an account for supplies. And the reason we like to do the account, because the account has really 2 columns. One column to record the increases and one column to record the decreases. So that's why we'd rather use an account than a column, because it's easy to mess up the increases and the decreases. And that's where this thing comes into play. Right, so we still say assets equal liabilities plus stockholders' equity, only now we have to think of it in terms of accounts, and accounts have 2 sides, 2 columns, a left-hand side and a right-hand side. The left-hand side is called the debit side, the right-hand side is called the credit side. Right, and here it is expanded to include all the elements of stockholders' equity, common stock, retained earnings, revenues minus expenses minus dividends. And notice the green arrow indicates the increases, the red arrow indicates the decreases, which side increases and which side decreases. And I think they gave you this little mnemonic here, dealer, DEA, on the debit side, dividends, expenses, and assets get increased with debits, and liabilities, owner's equity, which is another way of saying stockholders' equity, and revenue get increased with credits. So if it's helpful to use this to help you remember, that's fine, right? But this, again, this is another one of those pages that you might want to print out and just keep in front of you. Sometimes when you're doing your homework, it'll just help you when you get stuck. So with that in mind, I think we can actually look at that first homework problem. Now, okay, let me see. I added something to this morning and I don't see it. It's like it disappeared. All right, I don't know what happened to it. Let me, let's see. Here it is here. Okay. So I'm going to go over this first homework problem with you. Pretty much the way you would see it if you were doing it yourself. I don't know if anybody's attempted it yet. I haven't looked. Right? But this is what it would look like on your computer if you were doing this yourself. Let me see if I can blow it up a little bit. Okay. And they give you all the transactions here, right? The following information applies to the questions displayed below. Below are the transactions for Udi Sewing Machine Shop for March, the first month of operations. Record each transaction. If no entry is required, select no journal entry required, right? Every once in a while they throw something like that in there, which I really don't like, but that's what they do. Okay, now notice across the top here, you see 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. There are 10 transactions listed here. There are 10 transactions listed here. So we have to record each one separately. I really, again, this is something that the textbook publisher gives. You know, again, if I had my way, I would say record them all on one page rather than do them one at a time like this. And also another thing that this program, it doesn't let you go forward until you finish this part. In other words, this problem is in 3 parts, A, B, and C, and it won't let you look at B or C until you finish A.
No, it does. You just have to go to the bottom.
Oh, it does?
Yeah. When I was doing view general journal, I think, and then it gives you. It lets you at some point.
Terrific. So let's see if we can do that. And the reason I like to do that, oh, I don't see it.
There's definitely like an option there because I was looking through it. Oh yeah, I think that might.
See, it says answer the previous questions to unlock.
Oh, okay, my bad. Might have been another one then because it was allowing me to do it.
Okay, well, let's see. All right. Well, the reason I wanted to see part B before I finished part A for a very simple reason that part A, wants you to record journal entries. Part 2 wants you to take the numbers and put them in the accounts. And then part 3 was to do a trial balance. So if you, the way I like to do these things, if I could look at part 2, I know what the accounts are. Right? I know what the accounts are, so there's no guesswork. So for example, if I look in the text, the written text, which you can probably find from your text, right? This is on page, starts on the very bottom of page 101. They tell you at the end of the problem, right? Record each transaction, post to the T account, calculate the balance of each account, prepare a trial balance, and then they tell you, and this is very important because a lot of people would just ignore this. Udi, I guess that's how you say that, or Ut, uses the following accounts, and it gives you the names of the accounts: cash, supplies, equipment, accounts payable, etc. Well, the reason I like to know that is because they're telling me the names of the accounts that they want me to use. See, a lot of times as a student, when you look at a problem like this, sometimes your mind just goes blank and you know, so where do I start? Well, that's where you start. Look at the names of the accounts that they give you and just say, okay, I have to use these accounts. I can't make up any other names. I can't make up any other accounts. I have to use what they give me, right? So let's keep that in mind as we try to go through this. Now, issue common stock in exchange for cash. Again, very important. When you're analyzing these transactions, when you read these transactions, again, your mind goes blank. I never did this before. I don't know what to do. I don't know where to start, right? Look at the words. I see the words common stock and I see the words cash. Do you have accounts that are named common stock and another account that's named cash? Yes, absolutely you do. So when you read this sentence, look for words and then go look for those words in the list of accounts they give you. Now you just have to decide what's debit and what's credit. Whenever you see cash, think of this. When cash increases, that's a debit, always. When cash increases, that's a debit. Now, since you just start, and when cash decreases, that's a credit. So just use a little common sense for a second. This is a brand new business. It just started. Before this happened, you didn't have any cash. Is it possible that your cash could decrease? That means you would have negative cash. That's impossible. That would never happen, right? So cash has to increase in this transaction. So did cash increase or decrease? Cash comes into the business, it means cash increases. Debit cash. And the nice thing about this is you only have to type a few letters and it pops up. So the debit always comes first. Debit cash, $3,000. All right, so now what are you left with? You're left with common stock. Common stock has to be the credit. Now, if you go back to that thing we just looked at, right, that dealer mnemonic, right, that'll show you the common stock would get the credit. Now, keep in mind, in our class, maybe make a note of this somewhere, we are never going to debit common stock. I swear to you on a stack of Bibles or other religious documents, right? I swear we will never debit common stock in this class. Never. It will never happen. So anytime you see common stock, it has to be a credit. In real life, would you ever debit common stock? Yes, there is one time you would debit common stock, and that's the day you go out of business. Again, I make a promise to you. None of these companies that we're working with are going out of business. So you will never debit common stock. It'll only be a credit. Now we want to click record entry. All right, and that takes us to number 2. Number 2, purchase sewing equipment by signing a note with the local bank. So in other words, we purchased equipment with credit. Look at your list of accounts. Do you have one called equipment? Yes. It's an asset. It's increasing. How do we record increases to assets? Debits. Okay? So we took care of the debit. Now we got to figure out what to credit. What word there is telling you what to credit? Does anybody want to take a guess? There's one word. Starts with an N.
Note.
Note. Notes payable. Right? Notes payable. Now, this is a little different than what we saw in the book, because in the book, we went to the bank and we borrowed cash, and then there was a separate transaction where we used the cash to buy the equipment. But the way they're explaining this is that we bought the equipment, more or less, we bought the equipment, but the bank gave us the money to do it. We never touched the money. Okay? Okay, pay rent. 2 words, pay rent. Now, anytime you see the word pay, what does that mean? What's happening? Cash decreasing. Cash decreasing. How do you decrease cash? Credit. Credit cash. Well, then what's the debit going to be to? What word tells you? Rent, right? Rent is an expense. Debit, rent, expense. Now you see you got 2 things here. prepaid rent and rent? Remember the example they gave us in the book? For some reason, for some unknown reason, in the example in the textbook, the soccer academy, they paid a month's rent in advance. Excuse me, a year's rent in advance. A year's rent in advance. That would be prepaid rent. But when you're only paying 1 month's rent, that's rent expense.
Now, if you paid like a year's worth of rent in advance, would you do the rent expense for like 11 months, but then the rent advance for like 11 months, but the rent expense for like the current month?
The way the book shows us, if you paid a year's rent in advance, you would debit prepaid rent and credit cash. Prepaid rent is an asset. And when we get to chapter 3, we would learn how to take a portion of that prepaid rent and turn it into rent expense, right? That's going to be talked about in chapter 3. Right, so here we just have to, pay attention to the cues that they're giving us. If we pay something in advance that we normally think of as an expense, it's really not an expense, it's an asset. Over time, it gets used, it expires, that portion of it gets recorded as an expense, but that's a separate transaction. That's chapter 3. So debit, rent, expense, credit, cash. Okay. All right, now this is another one of those tricky things. Martha, a customer, places an order for alterations to several dresses. Udi estimates the alterations will cost Martha $800. Martha is not required to pay for the alterations until the work is complete. Now, this is one of those things you could sit here and scratch your head for an hour trying to figure out what to do, right? But the answer to this is that there's no entry required. You only have an entry when the accounting equation changes. So think of what happens. Think of the accounting equation. Assets equal liabilities plus stockholders' equity. Read this thing. Did any asset change? Right? Nothing changed. No asset changed. No liability changed. No stockholders' equity changed. The customer came in with several dresses, showed them to Udi, and Udi said, "Yeah, this will cost $800. You don't have to do anything until I finish them." So no entry required is the entry there, which is really unfair. I wish they wouldn't do that. Okay. Purchase sewing supplies on account. Look at the words. Now, purchase doesn't always mean cash, right? Purchase sewing supplies. Supplies is an asset. It's increasing. Assets are increased with debits. Now, you didn't pay cash, but look at this word, these two words, on account. We may have said this last week. When you buy something on account, that's accounts payable. If you sell something on account, that's accounts receivable. So here, since we're purchasing on account, that's accounts payable. Okay, now Martha, who brought the dresses in, those dresses have been altered and the sewing shop receives $800. Debit cash, Okay, now, why did we get that $800? Because we, as a sewing shop, did work for our customer. When you do work for your customer, what is that called? Starts with an R.
Revenue.
Revenue, right? Service revenue. Right? So the takeaway is you can only have revenue once work has been completed. It doesn't necessarily matter if the customer pays you then or not. Here it was nice. We did the work, the customer paid, right? Kind of at the same time. But we'll see that sometimes the customer pays later. That's accounts receivable. And we'll also see that sometimes the customer pays in advance. I think we're going to have an example of that coming up, deferred revenue. Sure enough, here we go. Udi agrees to alter 10 business suits for Bob, who has lost a significant amount of weight recently. Udi receives $700 from Bob and promises the suits to be completed by March 25th. Well, cash is increased, right? So we have to debit cash. Now, if we completed the alterations, that would be revenue. But since the customer paid us in advance, look at this word here, class, promises the suits. Whenever you see that word promises, that means you have a liability. Normally you buy something and promise to pay for it later. Here the customer paid you and you promised to do something for the customer later. That's a liability. Now, that's a weird liability. It doesn't have the word payable in it. Remember this one? We talked about it, I believe. Deferred revenue. What does deferred revenue mean? It means it's not revenue yet. I haven't done any work. I only have revenue when work is completed. Here, the customer paid me before I did anything. It's not revenue. I only have revenue when those suits are finished, when they're altered. And I think we'll see that. That might be coming up next, in fact. So debit cash, credit deferred revenue. Here we go. Udi delivers the 10 altered business suits to Bob. In other words, the work has been done. The work has been done. Now I have revenue. Now I can say that I have revenue. Okay? Now I can't debit cash because I already got paid. So what do I want to debit? I want to debit deferred revenue. Now that I've done the work, I don't owe Bob anything, right? I've done the work. I'm finished. My obligation is completed. So debit deferred revenue and credit revenue, right? So I only have revenue when I complete work. If the customer pays me and I haven't completed any work, that's deferred revenue. When I do complete the work, I can debit deferred revenue and credit service revenue. Okay, now we're going to have, I think there's three easy ones, or two easy ones here. Pay. Anytime you see that word pay, what does that mean? Credit cash. Credit cash. Anytime you see the word pay, it means credit cash. Okay. Now, what are we paying this time? Utilities. Now, utilities, most of the time, is an expense. And you see these two words they gave me here, current period? That is telling me it's an expense. See, what's the difference between an asset and an expense when you get right down to it? Because in some respects, they're similar. What's the real difference between an asset and an expense? An asset is something that will benefit you in the future. You paid the rent for a year in advance. You're going to have a benefit for a year. But if I pay rent for 1 month, that's something that only benefits the current period. So current period expense, future periods asset, right? Future periods asset. Think of your cell phone as an example. Think of your cell phone. You have a cell phone, maybe you just got a new iPhone, right? What's the latest one? 11, 12? I don't even know. You're going to keep that phone for several years, right? Most likely you're going to keep that phone for 2, 3, 4 years. I still have an iPhone 6. I've had it now for 5 or 6 years, right? So when I bought that phone, it cost around $1,000, and I keeping it for 5 or 6 years. That phone is an asset to me. But every month I get a bill from Verizon to pay for the phone for that 1 month. See the difference? The Verizon bill I get every month is an expense, telephone expense. But the phone itself is an asset. And we'll see when we get to chapter 3 again, that with things like equipment or buildings, those assets depreciate. Right. So we have here utilities, expense, right? And the word pay always means credit cash. Pay dividends. Now again, the word pay means credit cash, so that means I need a debit to something, right? Debit dividends. Debit dividends, 150. Credit cash, 150. Okay, well, I guess that was it. All right, so here's all my entries. Let's click check my work. Right, and look for those green check marks. Right, they make you feel great. Okay. So now we want to move on to part 2. Which I'm stuck. Let's see. I don't know what happened here. See, I don't know. It didn't keep my answer. Okay. So now here's the second part of the question. Put these things in the accounts, right? So go back to your journal entries and put them in the accounts. Now, they have places for beginning balances, so I'll put zeros in them just to satisfy. And I'm putting the 0 on the side of the account that you would normally expect to see something. Okay, so if we go back now to that first transaction was issue common stock in exchange for cash, March 1st, right? That was 3,000. And we're looking for the common stock account, 3,000 on March 1st, right? Then the second transaction was to buy the sewing equipment, 2,700 on March 3rd. And credit notes payable, 2,700 on March 3rd. I'm gonna make the screen a little smaller because it's, let's see, okay, maybe that'll be easier to see. Pay rent on March 5th. Rent expense, $600. March 5th, and credit cash. Okay, now, you might be saying to yourself, why am I doing the same thing twice, right? Well, you're really not doing the same thing twice. Think of what the purpose of each one of these books are, right? We used to call these books because they were physical manual books. The journal is a list of the transactions in chronological order. The accounts keep track of each asset, each liability, and each part of stockholders' equity. I'm going to use the numbers in the accounts to actually prepare the financial statements. The reason I need the journal is because the journal, if I forget what this was for, let's say it's 5 years later and I forget what this $600 was for, I can go back and look at the journal on March 5th and I can find why I spent $600, right? I spent it on rent. Well, I could have spent that $600 on a lot of things. This time it was rent. Okay, now number 7 was no transaction, March 7th. The 12th, supplies. That was 130, debit 130. And credit accounts payable, right? And the debit credit thing in the beginning, it's very confusing, but you know, again, the more you work with it, it becomes almost second nature to you. Let's see. Okay, on March 15th, Udi delivers the dresses to Martha and receives $800, debit cash, $800. Right, that was March 15th. And that was service revenue. Okay, and now we've got March 19th. Those were the suits with Bob. Bob pays the $700 in advance, right? So that's a debit to cash of $700. That was on March 19th. And that was a credit to deferred revenue. Okay, now on the 25th, she delivers, I'm assuming it's a she, I probably shouldn't say that. Udi delivers 10 suits to Bob. Okay, now we want to get rid of the $700 here. Right, and that $700 becomes revenue. Okay, and now we have pay utilities. Utilities, oh, I didn't put a zero here. Utilities, $95 on the 30th. And that's a credit to cash. Okay, and the last, pay dividends. Dividends were 150. That was on March 31st. Right, and credit cash on March 31st. Okay, so now we've got to figure out how much is in each account. Now to do that, you have to add up. See, in some accounts, it's very easy. See supplies, we only had one transaction in supplies for $130. So that's fine. I can, maybe I'll do the easy ones first, right? Supplies is 130, equipment is 2,700. You see, there's only one transaction. In other words, with assets, debits increase and credits decrease. So if there's only one transaction, a debit of 2,700, that means the balance is 2,700. Same thing with the supplies. Now, accounts payable, there's only one transaction of 130, but liabilities have credit balances, right? So that's fine. Deferred revenue is 0. See, I have a credit of 700 and a debit of 700. They kind of wipe each other out, right? So the balance is 0. Now, why did I put the 0 on the credit side? Because this is a liability account, and I would normally expect to see something on the credit side. Notes payable, same thing. There's only one transaction for 2,700. It goes on the credit side. Common stock, same thing. $3,000 goes on the credit side. Dividends, 150 goes on the debit side. Now for service revenue, I've got two numbers there. 800 plus 700 is 1,500. Rent expense, 600, that's debit. And utilities expense is $95, that's debit. Right, so that's pretty straightforward. Now, cash is usually the problem because look at all the things that happened to cash, right? We had 3 increases and 3 decreases. And think of your checkbook. What would you do in your checkbook? If someone said, how much money do you have in your checkbook? Well, you would add up all the deposits, wouldn't you? And you would subtract all the withdrawals or the checks that you wrote. So these are the deposits, 3,000 plus 800 plus 700 minus 600, 30, and 150, right? So what does that come out to be? Let's see, I don't have my normal calculator today. Let's see, I have a fancy one, which I probably won't know how to use. Let me see. We've got 3,000 plus 800 plus 700, that's 4,500, right? And then we've got 600 plus 150 is 750 plus 30 is 780. So 4,500 minus 780, is that 3,720? 3,720? 780. Yeah, I believe that's right. Okay. And we always have this baby here. Check my work. What happened? What was this? What did I get? Oh, that wasn't $30. That was $95, wasn't it? There it was, 95. I don't know where the heck I got $30 from. Right, but that's the nice thing about this. You see how you make a mistake and you can find it. Okay, so that now is not 3,720. That's let's see. I don't have a calculator, so I'm doing this like longhand. That's 845, 4,500. Minus 845, 36.55. Okay, and we got this again to see. There we go. Okay, so look for your green check marks. Right, and except for that one mistake. That's fine. Okay. So now the next thing we're going to have to do is a trial balance. And I'm afraid I'm going to lose my work here. And the way this is set up for me, if I lose work, I don't get it back. So let me make some quick notes to myself. All right, so I think I got it all. Let me see if I can go on to the next part of the question. It says answer, but it's not letting me, I don't know. Now, the next part was to do the trial balance. Now, remember what the purpose of the trial balance was. See, it's very easy when you're putting numbers in those accounts to put them in the wrong places. So what the trial balance does is that it proves to you that the debits equal the credits. So you can be reasonably sure if your trial balance works out right, that you did what you were supposed to. The other thing that the trial balance does is now you can use the trial balance numbers to do financial statements if you were asked to. Notice, here's all your assets, your liabilities, your stockholders' equity, your revenue and expense. So you could do an income statement just by looking at these three numbers over here, right? You could do a balance sheet from looking at the numbers up here, and then you'd have to figure out what your stockholders' equity was. So let's go down the list and let's put in the numbers that we had in the accounts. So how much was in the cash account? It was $36.55. The supplies account was $130. The equipment was $2,700, right? And those were all accounts that had debit balances. Asset accounts have debit balances. Now, what about the liabilities? The liabilities should have credit balances, right? It's theoretically possible for a liability to have a debit balance, but not usually so. That usually means something is wrong, something strange happened. So you would expect assets to have debit balances. You would expect liabilities to have credit balances. So accounts payable we had was $130. Deferred revenue, I'm just going to put 0 in there because it's there. Notes payable was $2,700. Common stock was $3,000. Now dividends, be careful. Remember, dividends has a debit balance. Dividends was $150. Service revenue has a credit balance, $1,500. And the expenses have debit balances. Look, they were nice enough to do the math for you, right? So you didn't have to add the columns yourself. So the total of the debits is $73.30. The total of the credits is $73.30. So what it means is you're probably right. What you did, the work that you did between recording the journal entries and putting the numbers in the accounts is, you could say it's like 99% correct. See, there's always a chance that you could have put something in the wrong account. In other words, I could have debited rent expense for that $95 instead of utilities expense, and my debits would still equal credits, but you know, it wouldn't be right. It wouldn't be totally right. So there you go. That's how you do a trial balance. All right, and the trial balance is correct. Now let's see, how much time do we have? Okay, it's 9 o'clock. All right, so we can get started on the next problem. Right, this was problem 8, I believe. And in the textbook, let's see. In the textbook itself, This was page 102. And a similar problem, record each transaction, put each transaction in the appropriate T accounts, calculate the balance at September 30th. Now, the difference between problem, the one we just did in this one, is the sewing shop problem. The company was a brand new company. So all the accounts were zero when we started. This is not a new company. This company has balances in its accounts. So notice they give you a trial balance on September 1st, which is really August 31st, right? We do the trial balance normally at the end of the month. But saying these are the balances that we had on September 1st. During September, these things happened. So we need to write these numbers in the accounts. Now, if I was doing this problem by hand, I would do that right now. I would do it before I even start. But because the computer won't let me do that, it won't let me do part 2 until I do part 1 and so on. I really can't do that. So I'm going to have to go in the order that they want me to go. But the other thing to keep in mind is, what are the names of the accounts that you're going to be using? Well, here's most of them, right? Here's your accounts. This is your universe. Cash, accounts receivable this time, supplies, land. These are all assets. Accounts payable, notes payable. There's your liabilities. Common stock, retained earnings. Your stockholders' equity accounts. I don't see any revenues and expenses, but I think they tell you somewhere. No, they don't. I'm looking to see if they tell you revenues and expenses. Well, just be aware that you're going to have revenues and expenses besides what you see there, right? If you could get to the next part and you could see what the accounts look like, I'm sure you could do that. All right, so let's go through the entries. Provide services, right? Now again, you gotta pay attention to the words, maybe write it down, make a checklist or whatever, right? When you see certain words, it tells you to do something. Provide services. When you see those two words together, that is telling you revenue. Provide services means revenue. Provide services for cash. You did the work and the customers paid you, okay? Which is probably the best case scenario if you had your own business. So let's see. Cash is increasing. Debit, cash. Credit, service, revenue. Sometimes I like to see what the business does. You know, the last one told me was a sewing shop. This one really doesn't say what they do. Okay, now in the last problem, we purchased a sewing machine with a note, remember? Here, we're purchasing land with a note. Land is an asset, debit land. Now, you can't credit cash because you didn't pay anything, but what do you have? You have the note again, right? Notes payable. Okay. All right, now you gotta be careful here. You gotta pay attention. Remember, the words matter, right? The words are very important. The words tell you exactly what you have to do. Received an invoice. Received an invoice. In other words, you opened the mail that day and you see an invoice for $500 from the local newspaper for an advertisement that you ran that appeared on September 2nd. Okay, now, do you see the word pay anywhere? No. So it doesn't affect cash. Now, what words are important there? Advertisement, right? Advertising is usually an expense. Right? Now, I can't credit cash because I didn't pay anything, right? If it said paid the newspaper $500 for an advertisement, that would be one thing. But it says received an invoice. So what does that mean? When a bill comes in the mail, when you open it and you start cursing, right? Why are you so upset? Because it means you owe money to somebody, right? And when you owe money to somebody, that's a liability. And in this case, it's going to be accounts payable. So what are the key words here? Advertisement, that tells you advertising expense. Received an invoice tells you that it's accounts payable. Provide services. Now, we saw that earlier, right? Provide services. What does that mean? That means revenue. Now, the other example that we saw, it was for cash. This isn't for cash. What is it for? On account. On account. So I can't debit cash. I have to debit accounts receivable this time, right? Accounts receivable. Remember, accounts payable is when you buy something that you didn't pay for. Accounts receivable is when you did something for a customer and they didn't pay you. Debit accounts receivable, and the words provide services tell me that that's revenue. Purchase supplies on account. We saw that in the last one, right? Purchase supplies on account. Debit supplies and credit accounts payable. On account, accounts payable. Okay. Pay. Pay means credit cash. Fine. Now what's the debit to? Long-term note. Remember we borrowed money to buy the land, I think it was? Right, so now we're paying $4,000 on that note. Debit notes payable. Credit cash. Right, so the word pay tells you credit cash and note tells you notes payable. Receive $5,000 from customers on account. In other words, customers that owed you money now are paying. Now remember, when you sell something on account, what is that? That's debit accounts receivable, credit, service revenue. Now those customers are paying you. Receive cash. Receive $5,000, debit cash. Okay, so cash is increasing. What's decreasing? Accounts receivable is decreasing. If somebody owes you money and they pay you, they don't owe you anymore, right? So debit cash, credit, accounts receivable. Pay rent, we saw that, right? We're seeing it again for a second time. Debit rent, expense. Credit cash, right? The word pay means credit cash. You're going to find, class, that the same things happen in every problem, right? They happen over and over and over again, and every once in a while they twist it a little bit to make it look different, right? But there's a lot of the same things happen over and over again. So, you know, it's not like this endless stream of random events that happens, like the universe is just, you know, descending on you, right? The same things happen over and over again. Pay September's utility bill. Pay means credit cash, utility. is an expense. Now you see here, utilities expense, utilities payable. Remember how you had advertising expense and accounts payable? What if the bill came in and you didn't pay it, you didn't want to pay it till next month? That would be utilities payable. But you hear what they say? They say pay. So we have to credit cash. Debit utilities expense, credit cash. Pay salaries. Salaries is an expense. Pay credit cash. Pay dividend. Right? We saw that in the last problem too. I think that's it. Okay, and look for those greenies, right? Nice green marks. Okay. Now they want us to put the numbers in the accounts, right? Now the first thing we have to do is put these numbers in the accounts as beginning balances. You see them? So cash, beginning balance, 6,500. Accounts receivable beginning balance, 2,500. Supplies beginning balance, 7,600. Land beginning balance, 11,200. Accounts payable, 7,500. And remember, the assets are debit balances, the liabilities are credit. So what was that again? I forget. 7,500. Notes payable, same thing. It's a credit balance. Notes payable is 3,000. Common stock, 9,000. Retained earnings was 8,300. Right? Now we'll see when we get to chapter 3, the end of chapter 3, we'll see how numbers get put into the retained earnings account. You know, if you look at the last problem we did, retained earnings was untouched. Right? And let me just say as a general statement that you never record transactions directly into retained earnings. Right? You never record transactions directly into retained earnings. When we get to the end of chapter 3, you're going to see that we go through a process called closing. And when we close, numbers get put into the retained earnings account. But other than that, the retained earnings account is almost never touched. Almost never touched. Right? So you don't record transactions directly into retained earnings. You're only going to record those closing entries, which are summary numbers, into retained earnings, right? So just so you know that. So if you wonder why retained earnings is the way it is, that's why it's the way it is. Okay. So, all right, what do we have now? So those were the beginning amounts. Now we have to actually take the entries that we made and put those numbers into the accounts, right? So it's just easier for me. I'll look in the book and I'll go through those. I'm going to keep track of time. because I want to stop at 9:30, if that's okay with you. Or actually, after we finish this part, we'll stop. And then you can finish the problem from here on your own to get experience doing that, right? So provide services to customers for cash, 4,700, right? That was a debit to cash of 4,700 and a credit to service revenue of, you know what I'm going to do? Just to be consistent, right? I'm going to put zeros for beginning balances just because they have the space for it. You know, remember, this is a computer that's doing this, that's grading it, and we have to do, sometimes we got to do what the computer is looking for, even if I don't really think it's always the right thing to do. Okay, and the date, we should put the date in. The date for that was September 1st. Right, and if we go back to the cash, the date for that was September 1st. Right? Purchase land with a note, 6,400. That was 6,400 on the debit. And notes payable, 6,400. And then received an invoice, that was for the advertising expense. That was $500, and that took place on September 4th. And credit and accounts payable. That's on September 4th. And then on the 8th, provide services to customers on account. That was $6,000. And service revenue, $6,000. The 8th. Then we purchase supplies on account. That took place on the 10th. And then on the 13th, we pay $4,000 on the note. Doesn't want me to put something there. See how I know? Because it won't let me put a date. And on the 18th, received $5,000. Customers on account. And then on the 20th, pay rent. And then on the 30th, paid the utilities. Debit utilities expense and credit cash. Right, and then the last one, pay, oh no, salaries, I'm sorry. Pay salaries, September 30th. We ignore taxes in this class, right? That's another complication we don't have to deal with. And then we had the dividend, pay cash dividend. Okay. So I think that was it, right? And now they want us to calculate the balances in the accounts. And again, cash is usually the troublesome one, right? So let's save that one for last. So accounts receivable, we would add up these two debits and subtract the one credit. So 2,500 plus 6,000, 8,500 minus 5,000, I believe that's 3,500. Supplies, I would just add these two amounts together. 7,600 plus 1,100 is what, 8,700? For land, I would add these two amounts together. That would be 17,600, I believe. For accounts payable, I would add these three amounts together. So 7,500 plus 500 is 8,000 plus 1,100 is 9,100. For notes payable, add these two amounts together and subtract this 4,000. So 3 plus 6 is 9, minus 4 is $5,400, right? Common stock, unchanged. Retained earnings, unchanged. Dividends, just one number. Service revenue, add those two together, 10,700. Salaries expense, one number. Rent expense, one number, right? So now we just have the cash to deal with. And if we add the three debits together, right? Again, you should use a calculator. I normally have my calculator. Today I put it away because I have to run out right after today and I have to take it with me. So that's 16,200 on the debit side. And that's, let's see, 4, 5, 6, 4 is 10, 11. I think it's $12,000 on the credit side. So that's a balance of $4,200, right? So again, you know, take your calculator out. Don't do what I do. I'm doing this on a piece of scrap paper. But you would, again, if this was your checking account, right? Here's your beginning balance. Here are your two deposits. Add that together and then subtract all the checks that you wrote. And you should have a balance of $4,200. That's what I'm coming up with. And again, the nice thing is if it's wrong, I'll know. Answer is not complete. I don't know what that means. Oh, I didn't put balances here. See what I mean? Okay. So I believe answer is complete and correct, right? You can feel very good. And now the trial balance will be the last piece. Okay, but so far, so good, right? And I will leave the trial balance for you to do, and we can pick up with that next time. Okay, does anybody have any questions? Right. I realize this is a lot, you know, but unfortunately this is it. And I have to say, and again, I'm not preaching to you and I'm not trying to sound negative, but these two chapters, 2 and 3, are the two most important chapters in the book. And if you had any idea, if you had any goal of becoming an accountant career-wise, this is what you'll be doing, right? This is what you'll be doing. If you're just taking accounting because you have to take accounting and you're never going to do it again, then you just have to struggle through it like everybody else does with different things. You know, I struggled with statistics in college. I hated it. I just never really got the hang of it. You know, so I just did what I had to do to get through with it. I understand how that feels, but
I don't find it stressful, and I'm sure not going to be an accountant when in the near future. So, but I don't find it stressful. I feel like it's very quintessential to our logic and rational thinking.
Absolutely, I agree with you 10,000%. I just wish everybody felt that way. I've been doing this for a long time, like 35 years, and a lot of students struggle with this. And you know, I think the main reason is because you have to do your homework. I mean, there's no substitute for the homework. And, you know, with a lot of us with busy lives and other commitments and things we have, we underestimate the amount of time it takes to do some of these things, you know?
Right, of course.
And that to me is the key. If you make enough time to do it, I don't see how you wouldn't succeed. But that is the key. So as simple as that sounds, for some of us, it's not that simple. But yeah, I appreciate you saying that because it makes me feel a lot better.
Of course, no problem.
Okay.
And I'm a bit confused.
Okay, tell me what.
I don't know. I just like, I'm pretty good with like math and stuff, but it's just like, some of the things that you say translate to, like, you know, we'll like read like a prompt and I'll be like, okay, so we're talking about this, so it must be this. But then you're like, no, it's this. And I'm like, oh, still getting this wrong.
Well, the only thing I would say, where most people fall into, where most people have problems with this, the one that have problems, is they never get that debit credit thing, right? They never get that debit credit thing and go back to that chart that shows you assets, liabilities, stockholders' equity, common stock, retained earnings, revenues minus expenses minus dividends, right? And what the debit and credit rules are for that. And that's, if you get that, the rest of it kind of falls into place. And now it's just a matter of remembering what to do first and so on. That's why I say when you're doing the transactions, the words will help you. If you pay attention to the words, a lot of times the words will dictate what you do next. Like the word pay, credit cash. Doesn't matter what it's for, right? Doesn't matter what it's for. When you see the word pay, it's credit cash. When you see the word services provided, it's credit service revenue. All the time. Can't be anything else, right? So there are words like that. And like I say, when you read in the transaction, look for those words in the list of accounts they want you to use, right? And then match them up. And then say, okay, which one gets the debit, which one gets the credit? If you can do that, this is not that difficult. If you can't get past this, it is difficult. So that's all I can tell you. More practice. Contact I gave you, it's listed in the announcements. I gave you the Learning Center. I gave you the email of the person that's in charge of it. Email them, tell them what problems we're doing, what you're having problems with, and have somebody work with you one-on-one. Maybe then you'll get it. So take advantage of the resources. I mean, you're going to have this video from today's class to watch again. You have the videos that come with the textbook. Try watching those, right? But it does require time. It requires an investment of time. And if you're busy doing 100 other things, then this a lot of times gets pushed to the end and doesn't get the right amount of time devoted to it. But I can guarantee you, if you take the time, you'll get this. Anybody else? All right, so we finished the 2 homework problems. We have the trial balance to finish here, which we'll do first thing next time. And then you've got your exam to do. So try to get your homework done. Try to get it done this weekend if you can. And then spend your time reviewing and studying so that you're not cramming things at the last minute. Right? That's another thing. When you cram things at the last minute, that's when everything starts to go wrong, and you become very frustrated, and you get a negative result. But take advantage of the time you have. I didn't think we'd get this far today. I'm pleased that we got this far. So you can at least get most of your homework out of the way and still have a week to continue to review. And the other thing, if I could say, the more time you spend away from this, the more you forget. So right now, you know this stuff as well as you're probably ever going to know it right this minute. Tomorrow, you're going to forget a few things. The day after that, you're going to forget a few more things. The day after that, you're going to forget a few more things. So the longer you take to get back to this, the harder it will be, because the more things you will have forgotten. So if you have time today, stay with this a while longer and try to work it out. And I think you'll be happier with that result than if you wait 2 or 3 days and then pick it up again and say, oh yeah, what did we do? All right, anybody else? All right, so with that in mind, we'll call it quits for today. And, I'll see you next Wednesday. We'll go over some more problems together, right, because we have the time. All right?
Have a great day, Professor.
Okay. Have a good one.
Have a good one.
Thank you. Have a good one, Professor.